Hello everyone, hello traders over there. Hope you're having a good time in the market. My name is TshepZAR and I'm going to be presenting today the September 2021 Forex market preview. How do I view the market for the September 2021? So it is going to be just some few charts. I hope you guys take notes, and if it's possible you can like this video and even share it with anyone who would be interested in seeing how do we analyze the market and how do we monitor it during the course of the month. So without any waste of time, let's get to it. Let's get to business. So I always like to look first at over the period of years. I've always wanted to look at the market from the point of overall strength and overall weaknesses of the global currency markets or global currencies. So but I would always like to start at home by looking at the dollar against the South African rand. We usually target just about 1,000 points or 1,000 pips per month. So we hope that in the next 4 weeks that we will be able to look at the market that can give us just about 1,000 pips, and without risking anything more than 200 or 300. If you can take it, you can even go for 400 pips. That's our risk for the total portfolio of 1,000 pips. Let's get to it. I'm currently looking at the USDZAR. This is a 4-hourly time frame, but even if you can take it to the daily time frame, there shouldn't be any problem. But I'm currently looking at the H4-hour time frame. You can see that there was a nice movement there of the US dollar against the South African rand. Right there it is, making some form of a shoulder there, and we are hoping that it could continue to go to the upside, but this movement did not work out. So there is US dollar, the rand strengthening, the price coming to the downside. I believe that here it might have found a very nice neckline, and then from there we are just counter trending there. It's not for those who are believing in for the trends, but I believe that it has got a tendency to go back to that shoulder before it can drop to the downside. The good direction of the market would be for you to wait until it comes to the shoulder, and for others, they trade it only after the breakout of the neckline, meaning that if you break the neckline right now, then they will be selling this neckline and then they will be going to the downside. But based on probability, I see this point is a very nice point, which is a demand area for the dollar. Also using correlation, I believe that the dollar could come out to be stronger against commodity currencies. Perhaps could be for a week or for 2. So I'm currently kind of believing that the UZ could turn from this 1425 levels, bounce up to the back to the 15 psychological 15 levels. That's exactly where I think there's going to be a very nice big sell using our usual ABC pattern. So in this case, that will be my AB. I definitely believe C is going to be there, which is also a fib zone, and then it's going to be pushing the price back where AB is equals to CD. There I would stop and I'll wait to see how it goes from. This is around the 13.33. So I am trading and I'm previewing that the UZ could be bouncing around the current levels of the 1425, go to the 15 rands against the dollar, and then from there go down from the 15, go to the 13.30 against the dollar. But for September, I'm expecting the movement from the current levels up to the 15 levels, where an entry will get. I think it can continue for the month of October also, from the 15, finish October around 13.33. Could we see a stronger rand even before Christmas? I would not want to venture into that now. I'm not giving a long-term view. For those who are looking for my long-term view of UZ, please visit our Facebook page, either Let There Be Pips or Opulence FX. You usually would find my long-term view on USDZAR. Then let's move right along. I'm looking at the NASDAQ. The NASDAQ is currently doing a rising wedge in an uptrend. And I've also been monitoring the resistance point where the NASDAQ has been making some mild pullbacks. And that's the first point. And the second point is for me on my Fibonacci 127, usually it's a reversal point, pulling back to the 100, and I usually would be selling the 161.8, or I'm expecting a big fall around the 161.8, because that would be a triple top of that rising wedge. So in this case, I'm monitoring that. I'm definitely thinking that the price could fall right there at around 15.850. We are currently on 15.6 or 15.7. Some 150 to 200 points to the upside. I think there it could be finding some sellers, and then it would drop. Of course, this is the stock index, one of the strongest stock markets in the world, the US stock market, and the tech. And the tech has been doing fantastically over the past, even for the whole year of 2021. They have now been trading consistently above the pre-pandemic levels, and they've managed to keep the momentum. But the question is that how long will this momentum happen? So my view is that the NASDAQ, I've been buying the NASDAQ, by the way. We have started buying the NASDAQ, even we've followed up, and if you can see this pattern around the 12.2450 in our April-May preview, we have given an indication for us to go long, and we are now at our profit-taking levels. But yes, we have been buying this, we've been buying the NASDAQ and have been giving it very positive reviews starting from the period of April, May. There it is. So there it is. Even for May, we are buying all these support levels. We have been giving indication for us to buy them. So we are not just calling for a short or for believing that the market could pull back without not having to trade it. So I believe that it could be turning somewhere around 15,887 psychological level, 16,000. Then it could drop back to the 14,000 level, 2,000 points, go back up again, or completely, if the momentum is strong, it could break this momentum, go to the 12 or to the 1,300 levels, bounce back through by using a head and shoulder pattern and going to the downside. But at current level, I'm definitely not suggesting any need to be buying. According to me, I don't see any momentum stronger to go to the upside on the NASDAQ side. My view is also supported by the oscillators divergence. Let's look at them. I think that we are having some nice bearish divergence there. It does not always turn out, it does not always play out, but it is always worth to look at it. I always look at it, whether it is gonna come out the way or not. But I always like to look at, I know the stochastics will be completely overbought, but I always like also to look at the divergence. So on a weekly basis, we can see that there is a very nice divergence of the MACD. The momentum does not look very nice there, and then the stochastics should be overbought to indicate that there could be some struggle of momentum. But of course, we always wait for the confirmation. We always wait for confirmation, and that confirmation would be the confirmation of the candles for those who are more conservative. The stochastics is heavily overbought, though it's still facing up on the overbought area. The price could still push up, but I'm picking up the resistance there, and that's exactly where I think the price could be dropping. If the momentum could be sustained to the downside, this price can correct up to the 10,000, right, or just below the 10,000 points. I know most of the time when I say these things, some think that we are crazy, but we are technical analysts, and crazy is allowed when you are looking at the history. So this is just without counting the fundamentals. We don't know if the fundamentals will lead or whether the fundamentals will just come thereafter. But these are stock indices, and they are largely fueled by the fundamentals. Currently, not a very good technical buy level, and that's exactly my point. I'd rather wait for it to come down. The next buy will be around 30 try. It will be around 14,000, and then 19 to be exact is 13,945. At the 127 level of my Fibonacci. This ends the NASDAQ. So NASDAQ, we are bearish for now up to the 14,000. If it breaks the 14,000, then the 10,000 is even possible, according to my analysis. We will talk later, as we always do. The next chart would be the Euro-Yen. I'm looking at this, that this could be the neckline, and as I've been monitoring from the whole of last week, you can see that after the NFP, there is beginning to make a turn, correlating with the euro-dollar. The euro-dollar has also found a similar kind of a pattern. There, I think it has come to the supply zone, of the dailies, I think you should be finding some sellers right there. Even if you don't find it, there's going to be a very nice buy. If this price can break out above, then the same supply zone would be at demand area. But until then, this is a reversal point according to how we trade. This could be a neckline trading up to the shoulder. I think for me, the lowest risk to reward there would be buying the shoulder. Yes, I do buy the shoulder. I always say that based on the support and resistance trading together or confluenced with the, and when it's confluenced with the Fibonacci. So this is the Fib zone, push up, and the price could either come to this point or even go to the very highest point. So I am therefore saying that I'm bullish Euro Yen, but I would be wanting to buy the shoulder and keep my risk low. The risk would be somewhere around buying the shoulder. The risk is very small, around 120 pips. So I'll be risking 120 pips there, and then from there go up to 560 pips. So therefore, on top of the 200 pips that we're going to be picking on the NASDAQ, we've got a potential to pick up another 500 pips on the Euro Yen should it go to the upside as we predict. So Euro Yen positive for me. What we are seeing is a pullback. Others would be wanting to join the pullback. I wouldn't, not on this one, because I have risked to take a pullback on the UZ. I would then let the euro dollar drop by its own, buy the shoulder, 120 pips risk, and to go to 600 to 500 pips. Just about 1:4, 1:5. That summarizes the Euro Yen. The next would be the Brent crude oil. So we're supposed to be getting some 3 drives there. I think I could be showing you some 3 drives. So I'm expecting it to be doing a 3 drive around this pattern. There it is. So I'm expecting the movement, the price to come right from where it is right now. This is the resistance that is overbought. If it breaks this point, of course, it's going to be positive. But I'm now monitoring this resistance where it is right now, the resistance levels, which is now a triple top, wanting to go and make a triple bottom of this channel. Yes, the channel is positive. I am reviewing it or previewing it based on bouncing from this current level, the $72, $73, and going back to the $60 level. That is exactly where, for me, a buy can come out around the $60 level, looking at this bullish flag that is forming right now, and then I'll be able, and then I would then believe that it will be bouncing, swinging from that level, that it could be swinging from the level of the $60, right, the $60, and that's where perhaps we could see a very nice market going there, right? Could not just go there, could find another resistance somewhere there, cutting it and coming to the downside and making further low. So I think that the $80 levels should or could be the highest point even after breaking this bullish flag, because I don't see any further momentum being sustained, even given the US fundamentals above the $80 level. But the $60 levels will be a very good price. So if you don't want to buy, if you don't want to be selling this current $72 levels, perhaps wait for the bullish 3 drive to really finish its formation. Buy the $60, then we're going back up to the $80. That would be an amazing 2,000 pips. For now, as I said, around $70, $72, 1,200 pips up to the $60 level. This is my view. What would be your risk on the Brent crude oil? Very small risk. Selling the current levels, please, you do not, and I do not recommend any other stop loss except the one that is just tightly above the I think that's the $76 level there. So from 72, current level 73, and 300 pips stop loss just above 76.40, and then from there go to make it 1,200 points to the $60 level. How does it look like properly? Let's do it again. Just look at it. Even if I remove this, we are trading a bullish 3 drive. Okay, we are trading a bullish 3 drive, right? Like how I like it. There's our 3 drive, right? Others could call this whatever there's the bullish trade drive, should be able to go up there. And I think, like I said, my target is right there, should be going. I know others are looking at a head and shoulder. This head and shoulder for me is already messed up. I'm already out of the head and shoulder pattern for oil. I'm completely out of it. The pattern has completely changed, and I'm currently now slightly bullish. And when it comes to the top, to make that double top, then I would then consider to be bearish again, perhaps then to go and break the $60 level, depending on the fundamentals. That wraps up for our Brent crude oil. 2 more charts to go. I'm monitoring the USD CAD very closely, and I'm seeing that it should be bouncing right now. There was a down, it started over 2 weeks back to start dropping, and the NFP haven't even assisted. There it breaks. There's coming from what looks like the head, very nice reversal candle right there. This pin bar is massive, selling or indicating that there's a huge, there's going to be a huge, or there is already a big supply of the dollar against the Canadian dollar. Right, but that said, this looks like similarly that the dollar may want to bounce around, just need to go down slightly, bounce around the 1.24 level, right, which is exactly what I would be calling the neckline. So I'm expecting the dollar to drop slightly before it can find its demand, right, just around this level. That's exactly the level I'm monitoring. You can see that this level is also a very soft demand, and also a retested support level. It may not, and I don't think that technically it will have enough strength to push the price to the higher level. In this case, it might as well just push the price and just stop the price around the levels which I am interested in. This would be the head, this would be the shoulder, and I think it could push the price back to this supply, massive fresh supply. So I'm expecting this fresh supply to be activated around that sell limit of mine. Then it can push the price back through ABCD pattern, but then it will be pushing it back to the lows, to the levels of the previous low, where I think the buyers would be sitting on. So that's a bit of a zigzagging again of the USD CAD. During that kind of zigzag, that's when we could be seeing, because this is a daily chart, we could be seeing the oil moving in that 3 drive, breaking the 3 drive to the upside, you know, and then from there ultimately the USD CAD taking its final double bottom, shooting up to the upside, allowing the downfall of the Brent crude oil back from the 80 levels. As I told you, if it goes to the $80 levels, I believe that the USD CAD will be around the 1.20 levels. When USD CAD pushes from the 1.20 levels, then the Brent crude oil will be dropping and plummeting from this $80 level, $78, $80, then drop to the lowest, even below. When I say lowest, I mean drop to the low perhaps of the year, but I say it below the $60 level. Whether it will be this year or next year, we'll see. I'm only previewing the month of September. So this is how USD CAD looks like. Some nice opportunities. There would be a buy around the fib zone that will stop around the 1.28. What will be the risk? Right, the risk would be just more of an equal 1:1, you know. So you may choose not to be buying instead at the neckline, but just instead selling the shoulder at that nice big supply level around 1.28, 1.283 or 1.284, 1.283 or 1.284. So this is what I'm looking for, or this is what I'm looking at on the USD CAD. Let me just zoom it out for you so you can see how nice it looks there. So we're looking at something that looks something like this when zoomed out. That's what I'm looking at. There you go. So looking for the low, and then from there a nice big bounce back up to the 1.34 when the price of Brent crude oil will be dropping from the $80, $78 to $80 level. Psychologically it's 80, technical levels 78, and drop to the below the $60 level. I'm looking at gold. That gold still is poised now after bouncing from the 1600. There was a very beautiful rejection there, big rejection. you know, of those who wanted to sell gold, you can see a very nice defense there around the 1680 level. So they really don't like this below 1700 price. So the buyers are really protecting that gold should never trade sustainably below the 1700. So that's a very big rejection there of those that wanted to sell it to below the 1600 or up to the 1600, never allowed. So I believe that it has come to the neckline. There's a very nice head and shoulder there of a reversal. Then I think those who wants to buy, I would rather wait for this price to drop nicely or to pull back nicely, as I've recommended for others. Wait for a nice pullback there. Then the good buying price will be around the 1750 with the stop loss below the rejection of the I think it's the 1680 or 1670 levels. Right, but my saying is that I would definitely on this one also allow the price to drop, and then I'll be buying this point, which is the shoulder, allow it to drop from there, because the pips are on the upside, you know. There's nice movement to the upside that I would be interested in. Move up to the wait there, nice way, buy again there, and then go right up to 2000. Then make this nice harmonic patterns, which is going to be such a trap for all those who are going to be buying, who are going to be trying to still continue buying the gold. I think gold should be limited up to $2,100, $2,000 levels. I think there could be a sellers. It may not even just reach the 2,100. It might just do the exact psychological level of a 2,000 must have reached. I think those who've invested, even the late investors on gold, would or should be happy with that price. Then from there we could see the plummeting of gold falling from the 2000 levels back to the 1550 levels. It's not what I'm talking about in September. I just like my long-term views. So I am definitely kind of monitoring gold from this level. That gold, it's looking nice and positive in this instance, right? It's just looking nice and positive in instance. There it's preparing itself for an inverse head and shoulder pattern that can take you to the 2000 using a 5-wave structure. There, bearish harmonics will be on it, then it could drop the price right up to the 1550s. So those who are investing in gold right now, this is what we call the last wave of the gold investment, according to my view. 2000 should be the target. From there, I think the whole globe would be much more anxious about the certainty of the global market. Perhaps that's why I could be pushing back to the dollar levels from the gold levels, and the dollar, perhaps in the cryptocurrencies, could be the standard, and the dollar may not be the standard anymore. So I see this as the last or the final phase of dollar investment or dollar standard investment. Right, so basically this is the preparation to that. They have been trying to launch this move. You can see there's been rejection. For me, gold should have launched this move nicely so and gone there. There they've pushed slightly backward, but there is others who are wanting this push because there may not be some readiness from the US, from the dollar that they can invest in. So they're waiting for those fundamentals to clear. They're waiting for that budget from Mr. Biden. Perhaps everybody must be putting their hands on the deck for that over $1 trillion stimulus. Perhaps the dollar currency should be back again as a strong currency to compete with some crypto. I'm talking about Bitcoin and some other utility cryptocurrencies. Right, ladies and gentlemen, this is how we wrap it up for the month of September. We do have got some training available, one-on-one private mentorship with me, TshepZAR, and then we've got the primary, intermediate, and the advanced levels. And we can also help you with the coaching for those who are trading their portfolio trades or their portfolios, or who are trading live already and are looking for support and assistance. We can also assist you. Please just like us, like the page and send your correspondence through our Facebook page, or just email us on admin@opulencefx.co.za. We are waiting for your call and for your email. Until then, let's meet again for the next preview, and that's going to be the preview of October 2021. I hope that I'll be able to sustain this, and I'll be able to do month to month until the end of 2021. Until then, let there be pips. Cheers.